Hello, everyone. Thanks so much for being here with us today. My name is Constance Duke. I'm the Director of Sustainability at Sustain.Life, where I lead our technical practice, which is a team of sustainability professionals who define the functionality of the sustainability tools and feature in our software. I am joined today by my colleague and Sustain.Life's head of product, Jasmine Zhuang, and our special guest, Samantha Mueller, Senior Manager of Sustainability Reporting and Assurance at AICPA, the Association of International Certified Professional Accountants. Jasmine, Sam, would you like to say a few words about yourselves?
Sure. Hi, everyone. I'm Jasmine Zhuang. I lead our product team here at Sustain.Life. So I work very closely with the sustainability team, design and engineering to build out all the features and functionality you see in the platform. Thank you so much for coming today.
And hi, everyone. I'm Samantha Miller. I work for the Association of International Certified Professional Accountants, which is the world's largest member association representing and leading on issues for both the public and management accounting professions through advocacy, professional education, thought leadership, and support for the CPA license, the CGMA or Chartered Global Management Accountant designation, and other specialized credentials. And at the association, I serve as the Senior Manager of Sustainability Reporting and Assurance on our Assurance and Advisory Innovation team. As part of that team, I identify tools and techniques that improve assurance and advisory services on business reporting that falls outside the traditional financial statement audit, with my focus specifically on sustainability or ESG.
Great. Thank you both. Please feel free to post questions via the Q&A feature. And if we have time at the end, we'll try our best to answer them. We may also respond to some of your questions throughout the event. And of course, we will send a link to the recording of this presentation in the coming days. I will start by sharing why we built this feature and how it supports the greenhouse gas emissions assurance process. As a sustainability practitioner, I'll speak to the company perspective, and we're really fortunate to have Sam with us today to give us the inside scoop on the accounting and the regulatory side. And then Jasmine will wrap up with a product demo before we dive into your questions. So let's start with the value of third-party greenhouse gas emissions assurance for companies. Probably to no one's surprise, emissions assurance adds credibility to publicly reported data, and it reduces liability for publishing incorrect or even misleading information. And that, of course, creates stakeholder trust, not only in your emissions data, but anything that builds on that data set as well, such as your targets, for example. But pursuing assurance also drives companies to adopt more robust internal processes for emissions accounting, because when we know that someone is coming to audit us, we always want to put our best foot forward. And obviously, no one wants to tell the leadership team that an audit had dozens of findings. And then for companies who have voluntarily had their emissions verified in a bit of a more low-stress environment, there's the added benefit of already being fully prepared when mandatory third-party emissions assurance goes into effect. The chart you see here is based on 2020 CDP climate change data, and it covers about 700 US-based companies. And you can see that quite a large percentage of companies pursue Scope 1 and 2 emissions assurance. Scope 1 and 2 represent direct organizational emissions, as well as purchased electricity, steam, heat, and cooling. So 32% of respondents had their emissions verified or assured. For Scope 3, which are indirect and supply chain emissions, that percentage is smaller at 24%, but it's not insignificant. I will add here that Scope 3 doesn't mean all of Scope 3. So if a company has even a single Scope 3 category verified, like let's say business travel, it would be included here. And I think it's a fair assumption that most Scope 3 verification is limited to categories where data is more easily obtainable, like business travel or operational waste, for example. And I'll let Sam speak to any trends in Scope 1 and 2 versus Scope 3 assurance. The percentages here don't quite add up to 100, as some of you may have noticed, and that's just because the remaining CDP respondents had insufficient data or knowledge to consider assurance at the time of reporting this. Just a couple of other interesting data points here. In 2021, KPMG conducted a survey and found that 40 of the top 100 largest companies by revenue across 52 countries have sought assurance. In the UK, that number was even higher, with 58 of 100 sampled companies obtaining assurance. So this kind of indicates that assurance is even more common in large companies everywhere, and assurance in general appears to be more common in regions where emissions accounting is quite mature or perhaps more regulated. Assurance is definitely a commitment in terms of money and time invested. In fact, a lot of time goes into preparing an emissions inventory before you can even pursue assurance. And that includes things like setting up your internal data collection processes and systems, gathering data that is free from errors, making sure that your data sources are reliable, aligning the emissions calculations with leading accounting standards, such as the GHG protocol, for example, using appropriate emission factors for your sources, selecting the right consolidation approach, and so on. And adding these capabilities has been, and of course continues to be, a primary focus for our team at Sustain.Life. But at one point, we started talking about our own experiences with emissions assurance and how painful and time-consuming it can be to access the information that auditors require. In our former work lives, we didn't always feel that software platforms or service providers were particularly transparent or made it easy enough to get our hands on what was happening on the back end. So we kind of had to muddle through methodologies, call tech support, and just overall had to jump through a few hurdles to get to this information. And so we set aside some time to organize all of the backend information in our tool, which you'll see in the upcoming demo. And this includes any and all conversions of original emission factors and user inputs, every formula and calculation that shows how we arrived at the emissions output down to the individual greenhouse gases, and any metadata that supports not only audits, but also some disclosure systems that require things like GWP or factor sources. And we didn't want to send our users just to the general web page that houses a source somewhere, but point them quickly to the exact place in the exact table from which we grabbed our factors. In case this sounds like overkill, let me tell you about the time I had to check a gas factor on a German government website. This factor was literally buried within a modal on a subpage of this website, and I'm not going to lie, it took me 30 minutes to get there the second time around, and I read German. So we felt pretty strongly that we could spare our users and internal and external auditors these types of headaches. We archived all of our source pages, so if links change or they break, users and their auditors don't arrive at a dead end. And the reason we did all this is because auditors need to be able to essentially replicate how you got from your consumption value to that final emissions output. And in our app, we provide real-time emissions outputs as data is entered into our app. And so we make these calculations available at the same level of granularity. An auditor can then easily roll up those line items to the summary value that you'll ultimately report out to your stakeholders. And of course, we update this information. Our review cadence is a quarterly cycle. So we start somewhere around the middle of the quarter, and then we release the update by the end of each quarter. For us, having done this in the real world, we find that it's really difficult to practice sustainability effectively when the methods and assumptions and factors that underlie your emissions calculations are not made transparent, and we didn't want to contribute to that problem. We see getting insight into the calculations as a first step in assurance support, and an important one that we wanted to release quickly in light of increasing attention on third-party assurance. But meanwhile, we're also hard at work on other supporting features, especially around automated user data quality improvements. And speaking of increasing attention on third-party assurance, I will now hand it off to Sam to give us an insider view on the verification and assurance process.
Thank you, Constance. So first, I thought it'd be helpful to first share a brief overview of what's going on in the current sustainability and climate-related reporting landscape. I'll start with the European Union's Corporate Sustainability Reporting Directive, or CSRD, since that one has already been finalized. The CSRD will require companies in scope to report on sustainability matters in accordance with or based on European Sustainability Reporting Standards, or ESRSs, including climate-related and other ESG matters along with the process used to identify those matters within a dedicated section in their management reports. This will include disclosures on gross Scope 1 and Scope 2 emissions for the company's reporting boundary and GHG emissions intensity. Scope 3 emissions would be disclosed in total and disaggregated by GHG emissions attributed to upstream purchasing, downstream sold products, goods transportation, travel, and financial investments. Emissions related to significant Scope 3 categories would be separately disclosed. The final CSRD will go into effect January 1, 2024, with reporting in 2025 for large EU-listed companies subject to the current European Union requirements. And for US-based companies listed on European Union regulated markets, it's expected that the requirements will likely be effective January 1, 2025, with reporting then in 2026. All other non-EU based companies will likely be required to comply starting January 1, 2028, if the company generates revenue more than 150 million euros in the European Union and has at least one subsidiary or branch in the EU. The CSRD also includes provisions that require limited assurance on their sustainability reporting, provided by an accredited independent auditor or a certifier, which can include your financial statement auditor, and takes effect immediately. After a several-year period, the European Commission is going to perform an assessment to determine whether moving from limited to reasonable assurance is feasible for both auditors and for companies. On the US side, last March, the US Securities and Exchange Commission, or SEC, proposed its enhancement and standardization of climate-related disclosures for investors rule, which, among other climate-related information, includes requirements for registrants to report their greenhouse gas emissions, aggregated and disaggregated for Scope 1 and Scope 2, along with Scope 3 if material or if it's in a GHG goal. The Scope 1 and Scope 2 GHG emission disclosures will also be subjected to limited assurance during a phase-in period, followed by reasonable assurance. Both the EU CSRD and the SEC's proposed rule on climate include required qualifications for approved assurance service providers, such as requirements that they follow professional standards, which are freely publicly available and have been subjected to due process, that those practitioners are subject to public oversight, and whether the service provider has a license from any licensing or accreditation body to provide assurance. To increase stakeholders' confidence in the reliability of ESG information, companies are engaging independent CPAs to perform assurance engagements on their ESG information. And aside from the regulatory requirements, we're also seeing demand for reporting and assurance from investors and other stakeholders. Company-reported ESG metrics are now being relied on by an increasingly diversified stakeholder base, both within and outside companies, to evaluate risk, drive internal operations, and make investment, purchasing, and employment decisions. Because ESG issues are increasingly seen by investors as a window into a business's viability and the future of a company's performance, boards may want to assess whether public-facing disclosures about ESG are of a high quality, and that's where assurance can help. Investors are also increasingly focused on ESG information because they find that information helpful in understanding the resilience of a company's long-term value creation strategy, and the information also enables them to manage their investments based on ESG risks and opportunities. And in addition, investors increasingly look to published ESG ratings and data provider reports to make decisions. For example, ratings on ESG indices, including the CDP and Dow Jones Sustainability Index. Next slide, please. Okay, so here we've outlined some more of the benefits of assurance. Assuring ESG information also helps identify opportunities for improvement of systems and processes surrounding collection and reporting of ESG data, and ultimately more reliable and decision useful information. It increases stakeholder and investor trust and confidence in the information, and it enhances management's confidence in its ESG data management and reporting processes to better inform their strategic decision-making and understanding of performance against their goals. Producing accurate, reliable ESG information in turn results in things like greater coverage by analysts, because an improved information environment reduces forecast errors and allows for the convergence of analysts' expectations about a company's future profitability. It also can result in increased cost savings. From an equity point of view, assurance increases comfort among equity investors funding capital to entities that obtain assurance over ESG information, which signals that their social and environmental risks are being effectively managed, translating to lower cost of equity. Back to those analyst ratings and rankings, high ESG rated companies have been less exposed to systematic risks. Those risks are ones that affect the broad equity market or market-like sectors or industries, compared to low ESG rated companies. On the debt side, we're seeing lower average cost of debt for high ESG rated companies compared to that of low ESG rated companies. And that's partially because effective governance, which is one of the core elements of ESG, is known to reduce a company's default risk, which directly affects its cost of debt. Additionally, companies that obtain assurance over their sustainability information may see reduced interest expense in connection with sustainability-linked loans. The interest rates on those will possibly adjust based on whether a company meets a predetermined ESG goal, such as reducing carbon emissions. And last but not least, obtaining assurance on ESG information enables a company to convey its commitment to providing quality, reliable, and comparable ESG information to a growing and increasingly diversified stakeholder and investor base. It improves a company's ability to attract and retain talent. Employees want to work for organizations that set out to have a positive impact on the environment and society. And research indicates that the majority of millennials will not take a job if the company does not have a strong corporate sustainability reporting policy. And we're also seeing that Gen Z makes career choices based on the sustainability approach of an organization. And they're the first generation to prioritize purpose over salary. It also enhances brand reputation. Today's consumers perceive a higher level of performance in products and services from sustainable companies, and sustainability information has a significantly positive impact on consumers' evaluation of a company, which translates into purchase intent. Also, it's important to note that a poor approach to ESG reporting can very quickly destroy investor value. Not only can bad reputation damage relations with stakeholders such as customers, but being unaware of the trends in your industry can be extremely risky. Next slide. So here I've outlined a range of services that can be provided to enhance confidence in information. The ones that I've outlined here are the sustainability assurance and advisory services a CPA can provide. The specific service that you would use is based on the company's objective and generally is determined by the engaging party in consultation with the service provider. For those that aren't familiar with assurance services, I find it helpful to first think about an audit of financial statements. So with an audit, the CPA plans and performs the engagement to obtain reasonable assurance, which is a high level of assurance, about whether the financial statements are free from material misstatement. Similarly, examinations are an audit level engagements designed to provide that high level of assurance on information other than historical financial statements. Reasonable assurance is achieved when the risk of material misstatement of the subject matter, possibly your greenhouse gas emissions, has been reduced to a low level by performing extensive procedures. In a review, the CPA seeks to obtain limited assurance as a basis for reporting whether the CPA is aware of any material modifications that should be made to the subject matter in order for it to be presented in accordance with the criteria. A review entails fewer or different tests and procedures that result in a meaningful but lower level of assurance than reasonable assurance. The risk of material misstatement of that subject matter has been reduced, but not to the low level required by reasonable assurance. So when we're talking about regulatory frameworks such as the EU CSRD or the SEC's proposed climate rule requiring limited assurance, transitioning to reasonable assurance, that means we'll be starting out with engagements that are a bit more limited in scope, which provide a lower but still meaningful level of assurance over the subject matter, with the ultimate goal of achieving audit quality or investor grade sustainability information with reasonable assurance. Different registries and regulatory frameworks may use different terms and definitions for similar services like validation, verification, or assessment. Because organizations may not define these terms in exactly the same way, it's important to understand the official definitions of such terms under those registries or frameworks as it's relevant to your assurance engagement. An examination or a review performed by a CPA under AICPA attestation standards will likely satisfy these requirements. Further, as I mentioned earlier, with those regulatory requirements or for limited assurance over this reporting, transitioning to that reasonable assurance, companies, their management and boards should consider a service provider's ability to ultimately issue a report at that reasonable assurance level when choosing their assurance provider. So now I think I will hand it over to Jasmine.
Thank you, Sam. Hi, everyone. Just a reminder, if you have any questions as I'm going through the demo of our new feature, you can feel free to pop them in the Q&A section of the Zoom webinar. So I'm going to go ahead and share my screen. If you can stop sharing, Constance. Great. Okay, great. So hi, everyone. I'm going to be going through a walkthrough of our new audit tooling feature. I'm going to show it from two different perspectives. One is from the client's perspective, so a company that is measuring their emissions and seeking to get those emissions verified. And then also flip over to the auditor's perspective of how they can use our tooling to help them perform that verification. So I'll start with the view of the company. So let's suppose that you're a company that has measured 12 months worth of data for 2022, and you want to get your emissions verified before you issue your sustainability report. And so you've enlisted the services of a third-party auditor that you can then invite into the platform to help you conduct that verification. And what we've built out in the platform will help both you understand what you need to attach and evidence you need to provide alongside your data entries. And then we'll also help the auditor gain transparency into the sources and factors and calculations that we use. So this is from the perspective of the reporting company. You'll see that you have 12 months worth of data across scope 1 and 2 emissions across 2 different locations, London and New York. I'll just give you a quick view into the type of data that you've collected. So for example, for this entry for London, you've put in the amount of natural gas that is associated with your December month, along with the amount of emissions that were calculated by Sustain.Life. So you can see there's some audit tooling here where you can attach documents and add any notes, and that will really help in the verification process. So at the point that you finish entering your data and want to start an audit to get your emissions verified, you'll go into the report section of our application and click New Audit here. Here, Sustain.Life lays out the steps that you'll need to take to get your emissions verified. So primarily, you'll be selecting the data set you want to be audited. invite in an external party, or other collaborators, could be internal team members as well, and then review any issues found by the auditor before the audit can be marked as complete. So from here, I'm going to open a 2022 audit project and mark it as the audit year 2022, and then set a due date. This is just so the auditor can have a due date to work against and manage across multiple audits if they have them from multiple clients. So from here, you'll land on the audit dashboard. You'll see it's not populated to start, but you'll add data as the first step. So in this case, let's say my fiscal year is just the calendar year. So I will put in the time period from January to December. All locations are selected by default. If there are any exclusions you want to make, you can do it here, but I'll proceed with both locations. Then you'll see a quick summary of the emissions that you're getting verified. We are covering scope 1 and 2. And then when you click confirm, you'll see your audit dashboard now populated with the data from that year. So a few things to point out. At the top, you'll see your total number of entries, along with some states for each data entry that will help you track the progress of the audit, along with an emission summary of your scope 1 and 2 emissions breakdown and your recent entries here. So from here, you can see all of the entries you've added to your year's worth of data, and any of the latest updates that you've made will pop up here. So if you do need to go in and make edits or add attachments or fix issues, those will always appear at the top here for both you and the auditor to highlight. You can also view all of your entries and sort by a few different ways. So if you want to highlight a certain GHGP category, so for example, if you only want to look at electricity entries, you can do that. You can filter by scope, source, location, and date. And then you can also sort by highest or lowest in terms of metric tons of carbon dioxide equivalent to really highlight those entries that are contributing most to your emissions. But the next step you'll really take here is inviting the auditor in. And so for this example, we'll suppose that you're bringing in an external auditor, but you can always also invite internal collaborators or add them as team members in your existing account. So from here, I'll invite in my third-party auditor, who I have a pre-existing relationship with and who already is set up on a Sustain.Life account. When I invite them in, they'll only be able to see the data that I've permissioned them to see. So they won't be able to access any of the rest of my data just for the purposes of this audit. And I'll go ahead and send that invite. At this point, the auditor will then receive an email notifying them that their client has invited them into this audit project in order to verify the data alongside the due date. And now I'll switch over to the auditor's view. So the auditor will have their own account. The first page they land on is a dashboard of all of the audits that have been requested of them. They could be multiple audits from the same company across different years, or they could be across different clients as well. And so this, you can imagine, could be a long list. So you can sort by the due date, look at the ones that are due first, or sort by client. In this case, I'm going to zoom in on the 2022 audit that has just been requested of me. And you'll see that this dashboard is quite similar to the company view, with the addition of a few helpful tools. So the first thing I can do is download a CSV of all of my entries. We know this is important so that auditors can conduct any analysis needed offline, generate sample sets of the entries that they want to verify particularly, and any other kind of analysis. So this CSV provides that information, metadata about the entry itself, the categories, the dates, the input amount, and the output amount in terms of emissions. And from here, I can generate my sample. So for example, if I've decided I want to just sample one entry per location, so New York for purchased electricity and London for stationary combustion, I can go ahead and do that. And then come back into the platform where I can then have the platform match the sampled data set I just identified. So in this case, I'll go ahead and upload my sample. This has some instructions about how to generate that sample from the platform, downloading the audit data set from the tool, but then doing sampling on your own. And then I'll just select that file that I just identified my sample in. And you can see now that my rows have been successfully sampled. In this case, I'll want to go to the entries tab and then filter for just those that I've sampled. So I can really hone in on those data entries. And now I'll go into the examples of how you can conduct verification by looking at the specific entries. And this is really where the meat of the verification will take place and where we're really providing transparency around how we convert a user's input into the ultimate emissions output that will be part of the emissions that are reported. So on the left-hand side here, we have some helpful information about the user's entry itself. So the source, the location, the month, year, and any kind of helpful notes or document uploads, as well as information about the factors that we are using, that Sustain.Life is using in the background. So in this case, this is stationary combustion natural gas for the United Kingdom. We're using DEFRA conversion factors in the backend. This links directly to the data source that was used. And as Constance mentioned before, so auditors don't need to dig through all of the pages and tables. All of the source citations with exact page numbers, cells, and table numbers are all included below. And then we've also provided some additional supporting information with any additional comments from our sustainability team, the data year, and the publication year. Now we'll move over to how we go from the input data from the company to the emissions output. So in this case, the user has input 455 therms, and that resulted in 2.442 metric tons of CO2e. How did we get there? First, we've pulled the original factors directly from the factor source. So in this case, we have one for CO2, one for CH4, and one for N2O. The next step we take is to convert those factors into standardized units of measure. So you can see we go from kilograms per kilowatt hour to kilograms per MMBTU. We also then convert the user's input from therms to MMBTU so that these are standard and matching. And the last step is showing how we got to the emissions output from a formula, as well as with the data from above filled into the formula. And we know that an important part of the audit and verification process is to actually check those calculations in addition to checking the values. So you can easily copy and paste these values into a third-party tool like Excel and replicate the calculations to verify that they are correct. A few additional tools you can use to project manage the audit. So let's say in this case, the user hasn't uploaded any evidence. They haven't uploaded their natural gas bill. So in this case, the auditor can flag this for review and say, client needs to provide additional information like a bill, and then mark it as flagged for review. In this case, now the tag on this changes so that when you're filtering through the data, either as the company reporting or as the auditor, you can easily go to the entries that need to have some further review. Once the client has finished reviewing and made their changes, you can re-review this entry here. And if everything checks out, you can then mark it as verified, and the status will update here. So I'll just go back to this view and show you one additional example of an entry. So in this case, I'll show New York purchased electricity. So you can see all this looks very similar. I'll just point out that these factor sources are different since they're for the US. These are the eGrid factors from the EPA. And you'll see the citations down below as well for the pages and table numbers that information came from. And then the additional thing to note for electricity is that we surface both emissions outputs in terms of market-based and location-based emissions. So in this case, they're both the same, but you can see how we've used the formula and substituted in the values for market-based and location-based emissions here. So you can double check both methodologies. So as the auditor, you can track your progress using this dashboard, but once you're done and you've gone through a few different rounds of edits with the client and are now ready to complete the audit, you can mark it here, and the status will now change to complete. So with this tooling, you're able to, as a company, both prep yours to be verified and also attach any needed evidence. And then as the auditor, you can come in and see full transparency into how Sustain.Life is calculating the emissions based on factors and the user input. So before we hand it over to questions, I'll just know if anything you've seen is it interests you today, either from the company perspective, if you're looking to prep emissions for reporting and verification, or if you're an auditor that's looking to have some help and tooling to help perform the emissions verification, please don't hesitate to go to our website, Sustain.Life, and you can sign up for a demo there to speak more to a team member. So with that, I'll hand it over to any questions that have come in. Okay, I see there's a few that Constance would like to answer. So do you want to go through those?
Yes, there were a couple of related questions that came in. One was whether the auditor is auditing the user inputs, and the other one was whether our own calculations have been audited. And the answer is that both get audited as part of the normal verification process. And Sam, definitely feel free to jump in on this too. But auditors have to replicate all of the calculations that we have performed in the Sustain.Life application. This is the reason why we provide all of this information in an organized format to make it easy for the auditor to do just that. And then, yes, the auditor will also look at your inputs and what your process is for collecting the data and whether it's reliable and accurate. Would you like to add anything to that, Sam?
Sure. So, and I think there was one other question that was semi-related, which touched on whether or not some of the source data or descriptions would be detailed enough for auditors. And so I just wanted to add that auditors would also consider the completeness and accuracy of the population for testing.
Yeah, and I'll also just add on to that in terms of the data sources. So as I mentioned, the company that's providing the data can also attach attachments like utility bills and supporting notes, and those would appear in the expanded entry view for the auditors to review. And then in the case where you're leveraging data integration, so for example, Sustain.Life has some utility integrations where we pull in data directly from the utility provider. That's really ideal. And in that case, we already provide the fact that it's coming from a data integration as well as automatically attach the bill. So that just makes it much easier to have all of your evidence already prepared.
We have another question here on reporting solar panel generation for solar panels that an organization owns, so that it's correctly reflected for emissions reporting. So when a user enters renewable energy generation consumption into our application, we account for this with an emission factor of 0. And so the auditor would look at the source of your data on solar generation and make sure that the source is reliable and accurate. And that's also the type of documentation you can attach in our application as you enter your consumption data, or you can just provide the evidence directly to the auditor. We have one more on whether we anticipate obtaining SOC 2, and we have completed that process. All right. What about scope 3? Okay, let's definitely talk about that. That just came in. Sam, do you want to just briefly touch on the ratio of scope 1 and 2 assurance compared to scope 3? You know, how many people are asking for scope 3 assurance versus scope 1 and 2?
Sure. So, and also, I guess, just starting first with the regulatory requirements. For instance, with the SEC proposed rule, you're only required to report on those scope 3 emissions if they're material or if they're included in a greenhouse gas emissions target or goal. With regard to assurance over scopes 1 and 2 versus scope 3, those are kind of different engagements that'll be phased in as the reporting processes improve. So during that your scope 1 and 2 emissions are potentially part of someone else's scope 3. As the reporting landscape improves and develops further, then we'll have a better handle on what that scope 3 looks like. And so I think that's also why the assurance over scope 3 emissions is structured the way it is requirements wise by the SEC and CSRD.
And I can speak to how we're thinking about this as we go forward. Obviously, a lot of scope 3 are estimations, so the assurance process definitely looks a little bit differently for that. But we do plan to provide the same backend information for scope 3 that we're currently providing for scope 1 and 2. And this will obviously start with kind of the most common sources. And, just as with scope 1 and 2, we'll also outline our methodology, the factors we use, the calculations we applied, and so on. And then I think there might be a question for you, Jasmine, for APIs from energy providers. What is your coverage rate?
Yeah, so I don't know the specific coverage rate, but we have access to the data from over 900 utility providers, and that's both within the US as well as international countries. If anything's not supported, there is an onboarding process to enter your credentials with the third-party aggregators that we use in order to get those providers onboarded, but we definitely cover all of the main providers. So if you do have questions about that and you're already on our platform, definitely feel free to reach out to your customer success representative and we can get that answer for you in more detail.
Great. And I see one last one. Do you need to upload factor sources or are they built in? They are definitely built in. All the factors and the factor sources, GWPs, it's all in prior view that Jasmine has demoed. So you do not have to upload any factor sources or do any calculations on your own. All right. I think we've answered all questions, but feel free to reach out to us if you have any others. And like we said, we will share. Thank you so much, Jasmine and Sam and everyone who participated today, and have a great day, everyone.
Thank you, everyone.
Thank you.